studio. It's great to have you with us. Always remember, you can be a part of the program as well. Toll free at 877-927-6969. If you do decide to dial that up with your questions, comments, concerns in the world of real estate, the first voice you will hear is the melodious tones of our producer extraordinaire, Jimothy. Good morning, my brother.
Hello, and good morning, Johnny. How you doing today, bud?
Can I borrow a little bit of your voce? Just a touch of it,
okay,
if I could.
Be
fantastic.
Throw it right over to you.
Thanks.
It's like Jeff Dunham.
Appreciate you. Dunham. Nice to see you. Great to see you as always. And it's great to have you along for us on 2 hours of infotainment that we offer you every Saturday. I'm your boy, Johnny C. Let's get your starting lineup on a Saturday morning, your Florida Talk Real Estate team. Always nice to say good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, how are you, my friend?
I'm doing well. Good to see everybody. Happy Saturday.
Happy Saturday to you as well. Nice to see you. Great to have you in studio with us. He's sitting right next to the mortgage guy from the mortgage firm. There's Mike Rauch, everybody. Good morning, Michael.
Good morning, Johnny. How do you like that voice?
That's good.
Hey, how's it? How's it going?
It's going well.
I started saying how's it a lot. I don't know. That's like a Hawaiian thing. But then yesterday I was listening to some Australian show and they say, how you going? Right? I think that's right. How you going?
I like how you going a lot, actually.
Yeah. How you going? How's it going?
Can we try to make that stick?
I don't know. It sounds weird.
It doesn't work well. Yeah. How you going?
Going great.
Nice. Good
Going
to see
great.
You. Nice.
Thank you. That's so natural.
It does feel natural now. Yeah. And then I've done it a couple times. I think it's going to work.
Solving world problems right here.
Yeah.
One at a time.
Well, see what we can accomplish in 2 hours. Stick around.
All right.
It's always great to say good morning to, for 11 plus years now, I've told you he run a top producing Keller Williams team. At Keller Williams Innovations, you find the Florida Home Pros team and my guy, Jim DePola. I call him Jimmy D. How you be, Jimmy D? How you going?
I'm doing better than you, Johnny.
No, I'm good. I really am. I know it sounds bad. It's good, though.
Oh, my gosh. We heard some surprising news right before we got on the show. We'll talk about that in just a couple minutes.
It has not been a dull week.
Oh, my gosh. I wish it sounds like almost like a comedy caper movie or something with the car chase or something like that, right?
Truly.
It's funny. My first instinct upon hearing it is that's awesome. Right? Like I'm not sympathetic to Johnny's plight at all. I'm just like, that's so awesome.
Where do you see the pictures? And some of that because every moment you have to have like some lightheartedness, right?
Yeah. Clearly
you go, oh, is anybody hurt? Is everybody okay? And then you get to like the jokes and the lightheartedness. There's some moments where you're like, what? How? Do that again?
Oh my gosh.
Yeah. Can't wait to share with the class.
Well, when we talk about that, I remember when I used to be a newspaper reporter, there were certain houses that had your problem, but multiple times. It almost became,
yeah. I think if it happens again, I'm out.
Yeah. Because I hope it does it. Wow. I wonder if you have to disclose that, like the location of what's happening here, and you have to disclose that or not.
So we'll get into it a little bit more without being too cryptic. I'll tell you. So it'll be 10 years in September. We're in the house. Yeah. I've thought it since the moment we closed. I was like,
you predicted this.
Yeah, this is gonna happen one day. Yep.
It's possible.
It's just the scenario of how it played out, totally different than how I thought.
Oh,
yeah. Yeah. So we're
on the edge of my seat over here.
I know, right?
Must be Sunday.
Stick around, Timothy. We're gonna sell you the whole seat, but you'll only need the edge.
Start taking callers for to guess what the heck we're talking about.
Oh yeah. Perfect.
We have a lot to talk about today. We're going to focus most of the show on the homeowners insurance crisis. Yes, that's right. We are in a crisis. There's no doubt about it.
It does tie into what we're talking about a little bit.
Yeah, it does. Absolutely does. Actually, the Sun Sentinel has a thing about everything you need to know about how to file an insurance claim, homeowner's insurance claim. So maybe you're going to need that article.
I might just.
Step
one,
call Ross.
Yeah,
Ross.
that's the first thing. Right.
I did. That was my first step. Hey, Ross, I got to remember that call. Yeah, you do. You're like, hey, buddy. I'm like, hey, man. Weird one for you.
Oh my gosh, we learn something every day. So we're going to get into that'll segue into something else I was going to talk about. We'll just talk about that real quick. But besides the homeowners insurance, if you have any questions about homeowners insurance, and almost everybody does right now, here's a quick factoid. Average homeowners insurance policy in the United States right now is $1,700
Average in the U.S.
in the U.S. Yep.
That sounds amazing.
Yes, and
Sign me up.
we're at 6,000 for average here in Florida, and that doesn't include all the different pockets like we're in. That's just the whole state averaging it out. So,
Gosh, look at what areas have like $400 a year, because like,
yeah,
You
wow,
get into like Panhandle, not on the coast. It gets pretty cheap
Super
up
low.
there.
Yeah.
Yeah, like right in the center, like Lake City,
yeah,
like those
really
areas.
inexpensive
Yeah,
policies.
Jasper.
Jasper.
Yeah.
Oh well, I gotta write that down. That sounds like somewhere to avoid.
So we're going to try to give you really to help you understand what's going on in the crisis that we have right now, understanding roofs, which is one of the big issues. We're going to talk about the MySafe Florida home program for the home hardening, find out if that's really worth it or not. Also talking about the financing for it and understanding when you do some of that stuff like PACE energy loans and things like that, how you have to understand what you're doing so that you don't get caught in case you want to sell the property later. You're prepared for that. We're going to talk about how this huge increases in insurance is affecting people's purchasing power when they're buying houses, and are people being squeezed out and having to sell homes they can't afford anymore just because of the insurance. So we're going to talk about all this stuff today. We're also got other news that's happening. It's like real estate is really big news here in Florida right now. We just hit a new record in Palm Beach County for single family home median sales price. Again, second time, all-time record in the history of single family home sales in Palm Beach County. We hit a record last month and we hit the record again this month, June. So that is very surprising. Little good news, a little along little silver lining along these pretty dark storms is that interest rates have spiked, or I shouldn't say spiked, have dipped. I'm going to call it a dip.
That's a downward spike.
Yeah, a downward spike, but a little tiny bump. So it's going down, but down is better than up, right? We almost hit 7. I thought this week maybe this was the week for 7 on the Freddie Mac report, but it hasn't. So we're going to talk a little bit about that. But first, I'd like to get into a little bit of shout outs and talk about a couple things. A lot of stuff happened the last couple weeks here at the Florida Home Pros and Florida Talk Real Estate and Brightway Insurance with all the customers. And thank you, everybody from the radio show that's listening right now on our podcast who call us up and say that they would love to work with us. That business is the lifeblood of this whole show. So thank you so much. And the results are pretty good. I'm sorry, I'm kind of
the results are phenomenal.
Here.
And if you're like, yes, I'm looking for a team like this, always remember Florida Talk Real Estate is .com. It's your one-stop real estate shop. That is access to the entire team. I'm talking pros. These are experts in their fields, and they work cohesively together. Get them all at floridatalkrealestate.com. Know it, use it, love it, share it. It's floridatalkrealestate.com.
Thank you, Johnny. I wanted to do a shout out to Tom and Denise. We just sold their Lantana home. We put the house on the market for $450,000. The house had an ancient roof, and
is that a new construction?
Yeah, is that a technical term?
The roof was 7 years old.
Yeah, yeah, exactly. Ancient, right. That kind of reminds me like when Coral Springs in the early 2000s, they came up with a museum for the history of Coral Springs, and Coral Springs was founded in 1964. And in the year 2000, they were doing a museum for the history of Coral Springs.
You got to start somewhere,
right? You got to start somewhere, right? So
it's like the history of the Mormons, isn't it? I mean, about
the
same, isn't it?
With that property, with Tom and Denise's property, we were able to move the property in 14 days. The price we got is kind of a little bit more than what we were hoping for when the smoke cleared. So they were very happy with the process. They were longtime radio show listeners. They know other realtors, and they said, we're going to go with Jim. Awesome. When I went there for the listing, they had when I went for the listing, they had other.
Sorry.
I'm sorry. I don't know what's going on.
No, I'm trying to get a fact check.
What are you trying to do?
I'm trying to get a fact check from Mike over here.
Oh, there you go.
Yeah, Joseph Smith died in 1844.
Oh, way off.
Yeah.
What am I thinking?
Joseph Smith. I lost it. I'm
Oh,
sorry.
and Mormons.
So
sorry.
yeah. So what happened? What happened was we went into contract with Tom and Denise, and the deal fell apart. And we continued to show the property while I was under contract, which is one of our systems. And we had a backup buyer. So as soon as the deal fell apart, within 6 hours, we were in contract with the other people.
Mm-hmm.
And those are the people that closed. Everything worked out great. Thank you, Tom and Denise, for working with us on that one. Then we had Juan and Saray. We closed on a second deal in 2 weeks. Last week, we helped them sell their house. And then this week, yesterday, we helped them buy their new home. They're very happy with the process. Mike, of course, was the mortgage broker for Juan and Saray. Thank you so much, Mike, for everything you did.
Yep.
And that was a tough one. I don't want to get into it, but there was a lot of legal machinations in those deals. Very complicated.
A lot of ins, a lot of outs, what have yous.
Yes. And we also had they were selling their house, needed the money from that sale to buy the new home.
Mm-hmm.
Then that person was in contract to move out of state and use our people's money to buy their new home.
Ooh.
So there were 3 transactions, 2 states, 3 title companies, everything crazy town. Almost anything that go wrong did. None of it were fatal blows. We were able to recover from everything. But thank you, Juan.
Good people working. Sounds like all the way around on that one. Then
we were very lucky
Yeah.
that the whole thing got together. A lot of emotions, but we did it. And
a couple of standing 8 counts, but no
Were there?
knockouts.
That's
no
right.
knockouts, Jim.
So they got exactly the kind of home that they were looking for on the back end, which is exactly what that's the results that Florida Home Pros wants to get in the Florida Talk Real Estate Show. And also when we sold their house for full price, and we put it on the market, sold it in 4 days. It appraised at the price that we sold it for to the penny. And then on top of it, there were like 4 other homes that we were competing against in that neighborhood that when we put our house on the market, we're on the market for 30 to 80 days. Some of them are still sitting there. We've already closed. So it's all about the marketing and understanding what the value of your particular house is and the virtues of that house and trying to get it moved. So thank you, Juan and Saray. And they were repeat customers because they came to us about 2.5 years ago to buy and sell a home back then. So they're our first double seller buyers. I've never had a seller buyer and then come back and said, "Hey, sell that seller buyer, do it again."
Really?
Yeah, that's the first time ever I've done
surprised
for
by
the
that.
same family. Yeah.
You've
First
definitely
time.
worked with people multiple times, but maybe they're just not seller buyer twice.
Yeah, they weren't seller buyer at the same time.
Maybe just buyer the first time.
Yes.
Then seller buyer.
Yes, exactly.
Mhm.
Wanted to say congratulations to Tom. Tom is a really cool customer of mine. Really, this is the one that really
Customer of ours.
Yeah, I'm sorry.
Yeah.
Yes, Mike is, and Mike is a key component, and he's going to be a customer of Ross's soon too. But Tom is a school teacher using the down payment assistance program. You could call it the Hometown Heroes for him, but you could also call it the Live Local Act. I don't know what to call it anymore. So
they're still calling it Hometown Heroes. Hometown Heroes 2.0 is how they have it labeled.
Oh, okay.
So it's very modern, internet age 2.0.
But if you're not a school teacher or a public employee or a police officer, firefighter, things like that, then it's the Live Local Act.
No, I think it's still it's still called Hometown Heroes.
Oh,
now,
so
the funny thing is, Tom, he's been shopping for a little bit. He was eligible for the program prior to the July 3rd rollout, but since July 3rd, now he's very common.
Yes.
Yeah.
And the fact
he's
that
no longer special.
Yeah. Yeah.
Just like that.
Which actually he mentioned to me that he was bummed out that other people were involved in this program now, and it kind of dilutes all the workforce housing for, our frontline providers of services down here. And that's what Mike talked about last week.
Mm-hmm.
So, but anyway,
we should update the numbers on that to see how quickly those funds are.
But congratulations to Tom. We got him under contract because of his annual salary as a public school teacher, which I'm just getting on the record right now and tell you it sucks. Okay. To be, the amount of money you make as a school teacher in Palm Beach County compared to prices of affordable homes. But we were able to make it happen. We're in contract. Now we're not out of the woods yet because we still have to do the inspection and go over a couple things next week. But getting into contract, I probably showed Tom 20 properties before, made a couple offers. He rejected one couple were rejected They rejected. He rejected one after they were going to accept it, and now we're in contract. So congratulations to him.
Yeah. Oh, I forgot to tell you, there's a piece of good news on that file, Jim, that we found out yesterday.
What was that?
We have an appraisal waiver on that file.
For real?
For real.
That's excellent, but we don't need it because he's getting a pretty good price on that one.
That's why we have the waiver, right? Because the price is the AVM, right? Like Freddie's
Was automatic.
automated value
Was above
automated value model.
Valuation model, automated valuation model.
It agrees with it's your purchase price is fine.
Yeah,
basically is what it's saying.
It sounds like he has a good agent or
Yeah,
something.
it sounds like your numbers are pretty good, Jim. FloridaTalkRealEstate.com.
And then I wanted to do a shout out finally to John and Katie. They are also repeat customers like Juan and Saray. John and Katie sold a property with me last year. Now they have 2 properties with us on the market. We talked about them last week. We just put them on the market last week. One's gone. Bye-bye.
Bye-bye.
3801 Orange Street is gone. It was a 3-bedroom, 1-bath home in Lantana. It was just a little over 1,000 square feet. It's a cute little home in a great neighborhood. And we got above list for that. And several people called up and said, all these investors called, oh, that's too much money for the house. I'm not paying that. I'm not like, I know you're not a retail buyer. Retail buyer will see value. And we got above list.
Yep.
So congratulations to John and Katie. We still have one more for John and Katie to do. We were going to do an open house this week, but we had to transfer to next week. But it is 887 West Duval Street in Lantana. It's also in this neighborhood with Orange. It's a 3-1 also with a pool. It's on a corner lot. The house has a brand new roof and a newer AC. Inside is a lot of original. It's not in bad shape or anything. It's ready to move in, but it's not like Mac Daddy or anything. And we got it priced at $450, and we're getting action on it, but we just haven't found the right buyer yet.
Yeah.
So if you're looking for a pool home with 3 bedrooms, $450.
Open house coming next week, you said?
Hopefully open house next week. I want to confirm everything, but that's the way it's looking.
Can I ask you a question on the other home? I'm just curious. You'd mentioned you had investors calling. Did you ever get a real offer from an investor? And then how far below list were they coming in?
They're usually coming. Good question, Mike, because they have a formula and they're almost always blind offers. And when you're at this price point, you get all these investors sending you emails. Hey, I want you to be my agent. I want you to turn in, like, if the house is, let's see, like this house, we had Orange, we had on the market for like $335. And we were getting offers $215 to $250, right?
Okay.
Blind, right? No way. And it just isn't happening. And they're a big pain in my butt because I have to respond to all those offers no matter how ridiculous they are. Why don't you just offer $1 so I can reject the $1 instead of the $215,000, And I have to do the same thing no matter what. So those guys drive me kind of crazy. And
do you have to have like personal response, or can you just copy and paste like template? Like, nope.
Well,
like,
I can, because when we have houses like this, I explain to the sellers that we're going to be getting these offers. And before we even take the listing, as we're taking listing, we talk about this. And I say, will you give me permission at a certain price if they're blind offers? Meaning blind offers mean nobody's come and looked at it.
Right.
Nobody's done anything other than type in stuff into a contract.
Right. You're not going to pull them up over 100,000, right? I mean, what's the counter offer?
Yeah,
Can I just say no on this one?
You don't want to counter if you have it on the market for $335, they haven't seen the house. You're not countering $215,
right?
Because you're just reducing the price. That's like a
and
freebie for the investor.
Right.
It's like, oh, so we know that $335 wasn't their real number anyway, right? If they're willing to drop when your first offer is $215.
So you just reject it. You're not countering.
Yeah, we just rejected it. And then I say, price is too low to be countered. If you really if you're serious about the property, and I'm nice to him. I was like, if you're really serious about the property, get your buyer out there and look at it and turn in an offer that you think is fair, and we'll talk to you.
Yeah.
Yeah. But I knew that was going to go like that. No big deal. We also have another house that's on the market that we haven't moved yet, but we've gotten some nibbles on it, but it just hasn't been the right buyer. 715 Glenridge in West Palm. I love this little neighborhood. That's the old neighborhood I told you from the 1940s, where a lot of the residents there used to kind of keep an eye on the intercoastal and the ocean for naval activity during World War II and everything. It was pretty crazy, and they have to keep their lights off at night because they're afraid they're going to be bombed, right? I just think that's kind of cool.
It is.
It's a historic neighborhood. All around them are popping up multi-million-dollar homes. This house is a smaller 2-bedroom, 1-bath, 1949 house. It's got a brand new roof. It also has a newer AC, and it's in really good condition. Miami-Dade wood floors. The house is really built well, and it's ready to go. We have that at $345. So
Awesome.
that's a 2-bedroom, 1-bath.
Excellent.
Okay. John, who I just gave a shout out to, is sending me a message telling me about what's going to he says we are going to be able to have the open house next weekend.
Oh, nice.
Okay, so
Look at
cool.
that.
So he confirmed it.
Beautiful.
Okay, great. So that will be 887 West Duval Street in Lantana. And you could go to Facebook now and see some of the stuff about that property if you're like, hey, I want to go out there and check it out. But it's on the market now. So if you have a realtor, you don't have a realtor. If you don't have one, give us a call. We'll show you the property. If you have a realtor, hey, let the realtor know, hey, what about this 3-1 over in Lantana?
Find it on Facebook. That's
Yep.
Florida Talk Real Estate on Facebook.
Okay, so let me see. We are at 9:22. So I want to go over.
We can take a phone call if you want.
Oh, I didn't realize.
Let's do that.
go ahead and do that.
877-927-6969. Toll free to join the program with your questions, comments, concerns. Want to jump into what we're talking about, or if you do have a question for the pros, dial it up. Who do we got on hold there, Jimothy?
We got JR on the line, and he has a question about selling a home.
Excellent.
JR, welcome to Florida Talk Real Estate.
What's up, JR?
Good morning, gents. How are you today?
Hey, good morning.
What's up, my brother?
Good, Johnny. How you doing, buddy?
Good, real good. Good to hear your voice, my friend.
Yeah, same. Got a quick question. We're thinking about selling our home, first-time sellers, and we're thinking about moving international.
Oh, cool.
So,
What country?
We're going to Ireland.
Oh, so cool.
Yeah, my wife is from there, and her whole family is there. She's been here 37 years, and now it's time to spend the rest of the time with her family.
That's pretty
Wow.
amazing. Do you have a timeline for that?
Yeah, we're looking at probably the end of March, beginning of April.
Okay, good. So
So-
plenty of time for planning. So let me, if you don't mind, JR, I'll tell you a couple of things. I just dealt with a customer, first of all, that called me in January, but they didn't put their house on the market until, what is it, Memorial Day weekend in May? What is it, Memorial Day in May?
Mhm.
Yeah.
Yep.
So we had like a series of deep conversations plus updated activity, what was going on in his neighborhood over that 5 months before he was ready to put it on the market. So by the time we put it on the market, we had a pretty good handle of what to do. He got a little worried because some of the sales started sagging in his neighborhood, but we were able to get above list price on his house, and it did better than the other people in the neighborhood. And
Not surprised.
so I think part of it was all the planning that we did. So that's one of the recommendations I have for you, JR, even though you're looking way back in, going back to March, which is still what, 7-8 months from now or 8 months from now.
Yeah, correct. Yeah, correct.
Now the other,
Got a lot of, okay. Got-
yeah, I'm sorry. Go ahead. What were you going to say?
I said we got a lot of downsizing to do. We got furniture we got to get rid of, and pack up a bunch of stuff. We got 32 years worth of memories here we got to get put together.
Yeah, that's good. Yeah, and then you got to figure out how to get it overseas.
That sounds so daunting,
I know.
doesn't it?
I know.
Oh gosh.
Yeah.
Well, one of the things that would be a benefit about considering, working with our team in Keller Williams is that we actually have Keller Williams offices in Ireland,
Really?
and you would be my first international seller buyer, which would be so awesome if you decided to buy something out there. I don't know, maybe you're going to go out there and stay with relatives while I figure out the lay of the land. But even so, even if you did that, we could actually set you up just like I'm doing now. We're working with a guy named Gary, who's an old high school buddy of mine, and we got him over to Mike now. And Gary's been watching my videos and everything, and he's moving back to Florida. He's like, I want you to help me, but he's in Southwest Orlando. So we've already interviewed a whole bunch of top agents out there, gave the list to Gary so that he could choose who he wants to work with. And one of the key things is making sure the realtors really understand the needs of the buyers. So one of the ways I go through that is talk about specific needs of each individual buyer and have that conversation with the other agents on the other side to see if there's a good match.
Nice.
Yeah, so we could do all of that stuff for you. And then you'd also, I guess, have to learn about U.S. resident buying in Ireland. I don't know if there's any special thing you need to know about that.
Well, my wife is dual citizen.
Oh,
She's a
cool.
citizen of Ireland. She's a citizen of here. So
Cool.
that's something I'll be looking to in the future, to be doing that. Have dual citizenship also.
Sure. And you mentioned Port St. Lucie, right? Is that where you are now?
Nope, we're in Lantana.
Oh, in Lantana. Okay, I'm sorry. I don't know why I thought Port St. Lucie.
Lake Worth area, the west side.
Okay, great. So what I would do is if I, in order to help you while you're trying to get everything together with the house, one of the easy things we can do is set you up on an actual active live, what I call seller search. And what I mean by seller search is what's exactly happening in the neighborhood that's going to be your comps, so that over the next several months, and you don't have to be pinged every day. You could do it once a week, once a month, once every 6 months. We could set it up that way, but to give you an overview of what's happening in your community. So in case like over the next 8 months, interest rates might start going up, they might start going down. If there's changes in the market, you're going to be realizing how that's impacted your direct community and how it might affect your property values. And also what you should do is just look to see if there's any tweaking in the house that might be worthwhile to make you more money, but don't go crazy. That's always my advice to people. Don't go crazy about that, but to figure that out too, because you got plenty of time.
Yeah, because there's ROI and everything, right? A return on investment. And, you're always a big advocate for making sure that the margins there on what's coming back at you is worthy of doing prior to the sale of a home.
For the time and aggravation of doing it. Yeah, exactly.
Yeah, definitely.
So we'd love to talk to JR. If you left your number with Jimothy, that would be great. And I'll reach out to you early next week. Hey, Mike, are you ready to get your mortgage license in Ireland?
I'm sure they have mortgage activity over there. I don't know what it looks like.
Yeah.
But,
Well,
I didn't get-
I'm planning on buying cash. So
Cool. That's excellent. I wonder what homeowners insurance is in Ireland. I'd love to learn that. That would
Right?
be fun to learn.
Exactly. That's going to be a lot of culture shock, I'm sure. That's so cool. And I love that you instantly thought of this team too. When you're like, you know what, this is going to happen. And this is the team that's going to happen. This is the way it's going to go down. That's awesome.
Listeners, we're longtime listeners. We listen every weekend. And we love the team. So that's why we love you guys. And Johnny, we've been friends a long time.
Yeah, brother. Yeah. When I got the news that was I got a big smile on my face because I just instantly thought like, yep, that's gonna work well. That's gonna be beautiful. And I know you and Mags will be real happy there.
Yeah. Right now, just let you guys know, right now in our development, houses are selling probably within anywhere from a week to 2 weeks.
That's what happened to me. Both both properties I had on there under 14 days.
Real quick.
So,
Yep.
Yeah.
Yep.
So that way we're really excited. So we'll hope to hear from you next week.
yeah, we definitely will.
And, we'll sit down.
Thank you so much.
Awesome. Good to hear your
right.
voice, my brother. Thanks for always sending all the love and support to Real Radio's way, including Florida Talk Real Estate for 11 plus years.
Yep. Thank you guys very much. Have a great
buddy.
weekend.
Yeah,
Thank
you
you.
too, bud. 877-927-6969. It is that easy to dial up, be part of the program. Of course, you don't have to call up the show and say, hey, I want to work with you guys. You can do that through Florida Talk Real Estate. That's a .com. Access to the entire team. You get pros at floridatalkrealestate.com, and you get them all. Remember, floridatalkrealestate.com. There's a hotline there as well. You can call it 24 hours a day, 7 days a week. It's 888-973-7828. Again, 888-973-7828 at floridatalkrealestate.com. Let's do a little reset. We'll get back at it in 4 minutes. What are we getting into?
We're going to get into, let's see, maybe at the end of the show, we'll do Johnny's story now because we started off. Is
Sure.
that okay?
Sure.
Okay, so we're going to get into insurance next. It's really, really important. Then after that, we'll get into what's happening with the market, Mike. But we're going to talk to Ross, Brightway Insurance, Juno Beach. Look, if you're a homeowner and you've got homeowners insurance, you're really going to want to listen to this in the next segment. There's a lot of people out there that don't even know that they've got a problem or an issue that they're going to be dealing with in the future. So by listening to this, we're going to give you the overview, all the changes going on in the homeowners insurance, and then talking about ways that you might be able to save money to reduce the cost of this crazy insurance crisis that we're going through.
Wow. All right. Perfect. Lots coming at you. Thank you for being with us every Saturday. It's Florida Talk Real Estate, 2 hours of infotainment, and we're chugging through it on a Saturday. It's Florida Talk Real Estate right here on Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. Hot and humid conditions continue this afternoon as a heat advisory remains in effect. Temperatures in the mid-90s, though feeling like the triple digits through the second half of the day. Scattered showers and thunderstorms will develop this afternoon with the potential for heavy rainfall.
This report is sponsored by Audible. Boost your imagination with Audible. Listen to the biggest selection of audio entertainment, from celeb memoirs to motivation and more. Audiobooks, podcasts, and originals. There's more to imagine when we listen. Sign up for a free trial at audible.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title, that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Here we go, back at it on a Saturday. Great to have you with us. Thanks for making Florida Talk Real Estate part of your weekend plans every Saturday. We give you 2 hours of infotainment. That's right. A little bit of entertainment, a lot of bit of information on the world of real estate. I'm your boy, Johnny C. Our producer extraordinaire is Jimothy. Hello, my brother.
Hello, and good morning.
He'll always answer your call at 877-927-6969 if you're comfortable on the radio. And if not, you can always reach the entire team. Florida Talk Real Estate is a .com. And you got the hotline there as well. Reach out to them. Find us on Facebook and YouTube. That's Florida Talk Real Estate. Lots of ways to be in connection. Of course, on a Saturday, we live stream on both of those as well. That's Facebook and YouTube. Johnny C, well, that's me. Ross Komarinetz is with us with Brightway Insurance, Juno Beach. How are you, my friend?
I'm doing well. Good to see everybody again.
Good to see you as always. We got Mike Rauch, the mortgage guy from the mortgage firm here as well. Hello, Michael.
Yes, sir. In the house. Looking forward to this segment here. We put Ross, we call it, what do you call it? Like hot, he's on the hot seat, the hot take.
Ooh,
The hot seat. I like that.
Hot Ross's hot takes.
Hot Ross's hot takes.
Hot takes with Hot Ross.
Hot takes with Hot Ross.
Nice.
Yeah, something
Hot
like that.
tips.
Can we get Franny one more time there, Timothy? One more time? Can we? Just because
Hot Ross.
Thank you very much for that. And we do. Ross hates it so much. I don't think he's ever liked it. And of course, our fearless leader, Jim DePola. I've told you for 11 plus years. He runs a top producing Keller Williams team, Keller Williams Innovations. You find the Florida Home Pros team. Jimmy D, how you be?
I'm doing good. Doing good, Johnny. Man, this insurance stuff is so crazy. I was talking to somebody, Ross, a couple of days ago. Their insurance quote went from, now I don't know what size house this was or anything, but their insurance was $20,000 a year. It jumped to $60,000 a year, right? And they have a mortgage, so they have to have the insurance.
Ow.
Right?
I mean, your alternative is to say, I don't care about anything, and that's too much money, and get forced place. It'll be cheaper than that,
Forced place would be cheaper
than
probably?
60.
Yeah. Wow.
They must have very good coverage because, or Ross, is there a like let's say Citizens, for example, do they have a maximum dwelling amount that they would cover?
In Monroe County, it's $1 million. In everywhere else, it's 700,000.
So that's probably it. They probably got more than 700,000 to.
Yeah, and they might, that
home.
sounds kind of like excess and surplus.
Right.
I've seen those jumps in the excess and surplus market.
Oh, part of it was the roof. They were having a roof issue.
Okay, yeah. So they probably have an older roof, and they're they're over 700,000. So they probably have an excess and surplus policy, and that I've seen that on those policies.
It's a very crazy town. We're going to be going over after the end of the show. We're going to be going out with two of my buyers and looking at a house today. It's 2001, and the roof is 2001. And the first thing I noticed when the buyers picked out the property, when you looked at the overview, there was a bunch of tiles that didn't match the field of the rest of the tiles. So that told me that there was patch jobs done over time or repairs. And it's a 21-year-old roof, but it's barrel tile. And normally those roofs, when they were put on, said they were good for 40 years. So let's just start off with that real life example. Okay. 21-year-old house, 21-year-old roof. And it had been, some of the tiles have been replaced over time from the property. What do you think is going to happen if we went into contract with that and then we go through the inspection? And let's say the inspection, during the inspection, what are you going to be looking for as the surgeon agent to bind the policy?
Just due to the age of the roof, it's Citizens only. And so you just want at least 5 years of useful life on that 4-point.
So the 5 years useful life, let's talk about that. Have we gone through enough 5-year useful life? Okay, so let's explain useful life just so that people understand, because it's such a crucial part of understanding insurance today. Even agents don't understand it that well. The agent that is working on that property we're talking about, I taught her a lot and actually got her over to you, Ross. I think she's already called you. and said, look, you got to really work with Ross if you don't understand this stuff, because he's really good at it. So my question is before it was a 3-year useful life. So what does useful life mean?
I mean, useful life just means, how long the inspector thinks that roof will hold up before, I guess, it starts to fail and leak, and shingles will start coming off, and the granule loss, all that stuff goes into it.
So that was 3 years. So we were at 3 years useful life for quite a while.
Up until I want to say May 1st.
Yeah, I thought it
1st
was
or May
June
1st,
or something.
but I
Okay,
think it was
so
May
yeah,
1st.
so earlier this year, they changed it to 5 years useful life.
It's probably good to point out that it's not based on the age of the roof specifically. It's based on the inspector's opinion on how much remaining useful life there is.
Yeah,
So
on the condition of the roof.
Yeah.
More about the condition of the current roof than
Yeah.
the age of the roof.
Yeah.
So my question is, are you really kind of splitting hairs between 5 years useful life and 3 years useful life? And have we been in this new 5-year useful life situation where you can see that anything about that? Because my question is,
I can say it's funny how all the roofs now have at least 5 years of useful life on the 4-point.
That's exactly what I was thinking.
exactly.
Right?
I mean, I've got a real live situation where I brought up the inspection because it was recent. Ross did the quote and he came back and said, hey, so the 4-point came back. The roof was put on in 2012. It's shingle, and the inspector put 4 years of remaining life. So that roof is 11 years old, and he put 4 years of remaining useful life. So he's coming up 15 years as a shingle. I'm assuming that's how he did
and
it.
he's just doing that because he heard the insurance companies. That's the max they'll give. I guarantee it.
The 15 year.
Yeah.
So he's just refusing to do his job, basically, just passing the buck.
I mean, unless that roof looks bad over 11 years, which I doubt it does.
Right. So then you get the quotes, and then of course the diligent insurance quoting team that Ross has put together. They're like, hey, here's a quote for Citizens, but guess what? 4 years is not working anymore, right? Used to be 3, now it's 5. That's how I know like they enacted that change, right? Because I wasn't sure it was happening. So you have to go back to the inspector at that point and say, hey, was it really 4 years, or can you give us a second look? Right.
And so, get 6, maybe?
but it goes to Ross's point, which is like, oh, look, it's amazing. All these roofs now have 5 years left. Right. Regardless of their age or whatever.
That's my big thing from the beginning. It's like I was joking. It's like, why don't you say, 5.2 months of useful life? I mean, 3 years to 5 years. Can you really see a physical difference in the roof to know the difference between that short period of time? So I'm very interested in what you just said, Ross. So you said that like they have certain, I would guess, like formulas, if you will, that if you have an asphalt shingle roof.
I mean, as an inspector, no, you should not have a formula.
Right. But I'm saying the insurance companies have an expectation. Oh, this is a 15-year-old roof. We're not going to give more than 4 years useful life no matter what. Is that what they're saying?
No. So the insurance companies right now, if your roof is on a new business, if it's 15 years old, then the company may give you the option to provide and now this is at 15 years old. The roof is 15 years old. The company may give you the option to submit a roof certification that shows that that roof has at least 5 years of useful life left, which would put us at 20, right? So there's no, the companies have guidelines on age of roof, but that should not affect how much useful life a roof has. An individual roof has. The insurance company's guidelines should not have any effect on that.
And I've seen newer roofs, like when I say newer, 10-year-old asphalt shingle roofs that have passed their useful life. Why? Some of them are like have no shade and they're just beaten down on the sun. And that can really shrink the tiles over time and create a lot of problems. Other times you have trees that are scraping across, the branches are scraping across the roof over years and years from the wind. And it really can shorten the useful life of a roof. So I can see it happeing.
Yeah,
but really should look at it as a case by case basis.
I mean, it's uncommon that you know what I mean? So
yeah.
It's funny that, so they have to have a standard, and then they have to have a way of individually assessing the home. So this is the system. It's just we just happen to see this transition from 3 to 5, and then on paperwork you can see that it was a pretty smooth transition.
Yeah,
right?
I mean, when I see 4 points, it's either 5 years of useful life or 1 year of useful life. It's never I rarely just see 3 now. It's
Right.
either it meets it'll quote unquote pass, or no, it's past its useful life.
Do you ever get 10s and 12s and stuff like that? Do you get 10 years useful life, 12 years useful life?
Yeah, a
Do
lot
you
of
see
this,
that
like on a
sometimes?
brand new roof.
Yeah.
The guy will put
Yeah.
15 years or something like that.
Okay, cool. I didn't know because I haven't seen those too much. I guess I don't look at them unless there's a problem.
Right. Yeah. I mean, I
Yeah.
mean, if somebody goes, "Hey, I have a new roof," you're not going to go look at what the useful. It's a
Yeah.
1-year-old roof. You're not going to go look at what the inspector put for useful life.
Here's a fact I learned from reading all the articles for this show is that 40 cents on the dollar that you spend on your insurance is for the reinsurance companies. 40 cents on the dollar, right? So that's who's really squeezing everybody. It's the reinsurance companies and so reinsurance are the companies that insure that back the insurance companies, right? So that's why they call it reinsurance. And those are the companies that are saying there's too much risk in Florida, and that's why they're jacking up the rates so high. And then that's squeezing the companies to react to the reinsurance because they need that reinsurance to be financially sound, right? Am I right about that, Ross? From what
Yeah,
I'm
I mean, the
understanding?
last few years, reinsurance has gone up considerably because it's a global business.
Mhm.
So we've had a bunch of natural catastrophes globally. So that money's now been paid out. So there's less money available. So that money becomes more expensive. And then, based on all their losses in underwriting, they have to increase their rates anyway. And so it's just, their rates have gone up, 70% over the last few years.
So with the useful life for the roof, because that's usually the number one thing that people have problems with, right? Am I correct about that from your experience? It's
Yeah, I mean,
usually-
that's the biggest issue right now. That's
Right.
kind of the first thing that we're gonna look at.
Now, besides the age of the roof, there's 2 other things I wanted to talk about, which is the tie downs and also the second layer surfacing thing. I forget what they call that. You know what I mean? The water.
Yeah, on the
second-
wind mitigation report, it's called SWR, secondary water resistance.
Mhm. And then, so with the secondary water resistance, explain that to me. That's basically an extra layer besides like the felt that you normally see underneath a roof covering.
Yeah, it's an extra layer of like a rubber barrier that goes underneath the actual shingles and the plywood of the roof deck. It's just an extra layer of that.
It's under the plywood.
No, it's under the shingles
Oh, but
between the plywood.
got it.
So sitting on top of the plywood underneath the shingles. And I don't know what the cost is, but the savings is about $80 to $100 a year. It's not a huge savings.
Not a huge savings. And then besides the secondary water barrier, then also the tie downs. Now there's 2 types of tie downs, right? One's to the wall itself. I guess that's what we're talking about, the wall connection to the
roof to wall
joist.
connection.
Roof to wall.
Yeah. So there's on the wind mitigation report, there's 4 selections. One is where there's no roof to wall connection, like there's no metal connector connecting the roof to the wall. It's literally just nailed on.
Yeah, it's called toenail then.
Uh-huh. And then the next one is a metal connector that's embedded in the wall of the house itself that comes up out of the wall and attaches to the roof truss, but does not wrap over. And it's got to have it's got to be nailed in 3 times on that side. And then the next one is where that metal connector comes up, wraps over the truss, and you get 1 nail on that back side holding it on, and then you need 2 nails on the front side. And then the next selection is just 2 of those. That's called double wraps.
Oh, there's a double wrap too?
Yeah.
That's interesting.
Yeah, you see it every once in a while. I don't see it too often, but every once in a while we see it.
How much savings do you get when you do the roof to wall connection if you didn't have it before? Because we've seen a lot of savings over time about that on the show.
Yeah, it's changed a lot. Since we write most of our policies with Citizens right now, That's really my only comparison as far as the carriers go. And we're not seeing as, it's maybe a $600 savings or something like that. If you're not getting that credit, and then you have it retrofitted back to getting clips, which is that second one that does not wrap over. That's the one you can retrofit. On Citizens owner occupied properties, it's not as much as it used to be. For some reason, on their tenant occupied properties, we've seen that discount be a little bit more. But I don't know what the difference in the other carriers right now. With everybody, it used to be very significant. But with most of the policies going to Citizens, when we do see that, it's going to take you 2 or 3 years to make up the cost to have the work done.
So the two things we just talked about, which was that water surface, secondary water surface barrier, and the third nail, if you will, that would save roughly, just based on your rough numbers you just said, about $700 a year. And if your average policy is 6,000, I'm just making things up, that's more than a 10% savings. So it does add up over time.
Well, if your only motivation is saving money, you see the finish line, right? But you are hardening, right? I mean, you are making a structure more sound. So I mean, there's layers of benefit there.
You can't, if you have, unless you're putting on a new roof, you can't really do anything with that secondary water resistance. That would be something that you would have to include when you're putting in the new roof. But if you do have, if you're not getting a discount in section number 4 of your wind mitigation report, you can look at, getting those metal connectors added, or seeing why and getting that extra nail. You may just be missing a nail and get that extra nail, and it'll save you, $600.
Yep, that was a big thing for us when you started teaching us that, and then actually had the company Third Nail to actually do the work for our customers, and they got raving reviews. And you don't have to rip apart your house in order to put it on. That's what everybody thinks. You can usually go through the eaves or the soffit.
Well, a lot of times they can just go in the attic. But if it's more of a flatter roof, then they have to go through the eaves. But if it's a normal, like a regular kind of pitched roof, they can get in the attic and just bang it in there.
Yeah.
Dance all around the AC duct work and make it happen.
Yeah.
That the trick there was that you already had the straps in place. It just didn't put enough nails.
Right.
So you had to go add that third nail. Right.
Yeah.
Pretty clever. But I guess if you're replacing your roof and doing the sheathing at the same time, then it makes sense to do, or maybe they even have to. Do they have to strap it at that point, like per code, if you're replacing your sheathing?
I don't think so.
I don't think so. No, you'd have to ask for it.
But if you're doing it, that's a good time to do it for sure.
Absolutely. Yeah, for sure. And then let's just talk about different types of roofs for long-term benefits to kind of stop the insurance companies from jacking you up really bad, right? So if I had a choice between an asphalt shingle roof, a barrel tile roof, or a metal roof, of the three, which would you, for long-term protection from not having the insurance company come and say, hey, you got to replace this roof, which one would you pick of the three? Or is there no
Are you putting on a new roof, or are you buying a house?
Let's say you're putting on a new roof.
Okay. I mean, you're going to be there forever?
Yeah, let's just assume that you're going to be there for the long haul. You want to put the roof on and have as little headaches, predictability, that you're not going to have problems for the longest period of time.
I mean, either metal or tile. Some people are saying, metal outlast tile, and some people say tile outlast metal.
What about solar tile?
Solar tile, the insurance I don't think anybody's doing that solar tile yet. Nobody will insure it, at least in the admitted market. You may be able to get into excess and surplus.
So if you own your home outright, you don't need insurance, then you can put on the solar tile.
Yeah, then you put the solar tile on.
But a lot of companies don't want to insure homes with solar panels.
Yeah,
becomes ineligible.
Right. So, but getting back to the roof. So let's just say that the asphalt shingle roof versus the metal roof is 1.5 times to 2 times the amount of the roof. Right.
Nothing's going to affect you until 10 years from now, where no matter what roof you put on, and hopefully, by then we've figured all of this out.
Right.
And I mean, the biggest thing is being sued by the insurance company, or being, the insurance company is being sued. So, in the next 2 years, hopefully that gets shaken out, and 10 years from now we're kind of back to, I would say, normal.
So
10 years we got to wait.
Well, no, I'm just saying by the
Yeah.
time, your roof decision would
be-
affect you.
Hopefully things have flattened out, and
Yeah.
we have gone through those cycles. There was a really good gravy day period on this show where we were saving a lot of people money, right, Johnny? By just saying, hey, call us up, let's get a new insurance quote, you might have a big discount coming, and everybody did. Well, not everybody, but lots and lots of people did.
Yeah.
And now we're in the exact opposite of that cycle right now, which
No,
is
but
like
you
not
still
that
should
fun.
you should still be calling,
Absolutely.
because you might have run out of options. And then like when the main driver is just the money part of it, you can always go to Ross and say, hey, listen, I gotta have we're tight. I need the least expensive, but with the coverage I want policy possible.
Yeah, right, exactly.
And Ross is great at putting that together for people. And it may be distinct savings over, whatever the default renewal would be.
So Mike, let's just talk about the effects of homeowners insurance and then purchasing power or buying a house in today's market, besides worrying about if you can even get insurance because of the age of the roof. Okay.
Sure.
But it also affects, has over time, has greatly affected the purchase power of buyers because the insurance rates have gone so high. It's a higher mortgage payment for most people.
Yeah, if I were to sum it up in one word, I would say yikes.
Yeah. So to go
Yikes. Right?
So
Yikes.
from 1,700 to 6,000, just using the average numbers for the state of Florida. So that comes out to $4,300 a year more than the national average, right? So 4,300 divided by 12 is what? That's $350 roughly.
Yeah, somewhere around there.
Like 350. So how much difference in your purchasing power is
It's a lot.
$350?
Well,
is that your professional opinion?
Yeah, it's a lot. I mean,
yikes.
Listen, you can do
Yikes.
Let's
it's
just
a
say
lot.
300. You got to give me easy math, Jim. So 300, right? It's about $5,000. $5,000. Hold on. Let me back up here. $30 on the payment is about $5,000 of loan. Like if you borrowed $5,000 more, right? So there's 10 $30 increments in $300. So 10 times 5,000 is 50,000. So it affects your purchasing power by $50,000.
$50,000
on the low end,
right.
yeah, right.
Yeah.
Right? On a $300 difference. Now, it's not often you're seeing, like I'm working with buyers, right? So one insurance quote would be $300 a month or $3,600 for the year. The other insurance quote is $600 a month or $7,200. It's like you could certainly find that gap, but most people don't have that much of a space between their options. So it's like if the super cheap policy is $3,000 or $300 a month, the better policy is probably $450 a month, or something like that. So that $150 swing, that's a lot of purchasing power. And sometimes you can't go with the higher.
So how are
better
you
coverage.
How are you navigating this to give people a good budget
I'm
as a buyer? Like, what are you budgeting for? If you just have a person who's good for $400,000, I'm just making up numbers, okay? $400,000 buyer. You have a certain amount for property taxes, maybe an HOA included, or a condo fee. And then how much do you budget for insurance?
I would say at that 400,000 price point, even I would say anywhere from like 350 to 600,000. I'm probably putting in something like 350 a month for insurance. So 350 times 12 would be
about 4,000,
4,800, right? Or 44, right?
4,200,
4,200, something like that.
Yeah.
And I just kind of cross my fingers and say, I hope we can find a policy that meets their needs, but also comes into that zone. And, and sometimes, so I guess I do what I've always done, which is just try to estimate a number that's realistic, but also if you're pushing your limits, I can't blow you out of the water on my thoughts on the insurance quote. Like if I think a policy is going to come in at 4,800 for the year, right? Then I'm putting 400 down on the monthly. But if people are pushing their limits, like could an insurance policy really be found less than that? Right. So I kind of estimate I'm probably on the lower end as far as like when I see quotes from Ross, they give you different styles. Like this is the good one. This is our recommendation. If you're on a budget, here's another option. If you're really on a budget, sometimes here's a third option. And so I try to like find a middle ground, but my job is to estimate a realistic number and an attainable number, but also not go crazy.
Have you seen a significant amount of deals maybe where you had to call the people up and say, I'm sorry, you can't buy that house because of they're at the upper limit of their purchase price, plus let's say the HOA fee
Yeah.
is okay, but then the insurance, it just blows them out.
It's sometimes if you have no, like traditionally, if you have no space to move on the debt to income calculation, I mean, you're not, there's no way to buy down to a lower interest rate, right? You can't mess with the property taxes on once you have a property. You can't mess with the HOA. So the one number that was somewhat flexible was always the insurance number. So if you had to get your payment to be $50 lower a month, well, insurance was your target for that. And so to answer your question is, yeah, sometimes you just say, hey, listen, I know what number we need on insurance, and I see this house, 1959 with a 30-year-old shingle roof, no window protection. Like, we're not getting an insurance policy with the $2,800 a year, whatever it is, or $2,500, whatever is needed in order to get you into that house. And maybe in some insurance world, you can still like call your agent, be like, hey, I need $1,100 on this 3,000 square foot home or something like that.
Yeah.
Right? Are there agents out there that would maybe do that? I don't know. I don't really operate on that level, but you have to be cognizant of what you think the insurance number is going to be, because it does impact your payment. And if you're on the edge or on the high side, like your very limits of your qualification, it can make or break it. And also from a cash perspective.
How much more now in this era in insurance? I guess specifically it would be like townhomes and condos, because I can't imagine how single family homes under HOAs would be impacted similarly. But how important are the coffers and the assessments and like the history of how well run that homeowners association's been for buyers now that are really pressed up on their number? Because if they get in, like, let's say they close on a condo and their monthly obligation for their HOA is $500 or something, and that's like kind of their max. And then they find out 6 months later, like, we have these special assessments and your nut's going to double because the insurance for the whole place is doubling. Like, how far do you have to delve into the history of that HOA and how well they're run to kind of get a feel for where their numbers are going to pop off in the next year or so? Can you even do that? Is that predictable?
Yes, it's really important to do that. And in fact, in condos, it's legally required that the seller gives the buyer the financials of the community to see what's going on with that.
Right.
We just had a case about that.
Yeah. You also have to, if there's been any official discussions of future assessments for things like the 40-year inspection, or maybe the re-roofing.
Even if they just had like a meeting for the association,
it's supposed to be disclosed. Yeah.
Really?
Yeah.
If they have a meeting, if there's any electronic communication about it, even if it isn't at a meeting, like they send out an HOA mass message to people saying, hey, we're thinking about doing this, you have to report it.
So am I correct in thinking that probably impacts the townhomes and condos much more than the single family homes that are under HOA?
Well, it could affect single family homes too.
I think special assessments, because they might, maybe they're doing like a project, maybe it's 55 plus and they're doing a tennis court renovation, or something like that. That would be on there. But I agree with you, condos and townhomes, and especially communities where the HOA covers the exterior insurance. Yes. That's where you're probably going to get most of that activity, that type of activity.
Potentially like big pops for the overall umbrella coverage, right? I mean, big pops.
Well, I mean, I don't deal with any of the, the HOA master policies or anything like that. That's a completely different animal. But I don't like that side of it.
That's a big beast.
But those have gone up too.
Oh yeah.
Yes.
I've been reading more and more really horror stories about
gone up and drying up. Carriers are drying up there too.
Yeah.
This is a real crisis. The politicians right now, they're all at each other's throats, both sides, the Reds and the Blues, they're all over each other's throats right now, right? And
because the reality is a lot of the buildings, they've kicked the can for so long that they need these big investments, but so many that are in them. Even I hate getting into too many people's financials, but a lot of these people are in a position where they can't afford to have these big pops in numbers, and they're going to be forced to sell.
Well, talking about people that become priced out because the monthly condo or HOA fee gets too high. That happened to one of our customers once. They came to us after they bought a very affordable townhome in a community in West Palm. Young couple bought the thing for like, this is way back 10 years ago or something, right when we started the show. But they bought something for $150,000 with like a $200 HOA fee, and then a storm came in and impacted the community common areas. So they needed money for that, and they didn't have it. And the HOA went up from like $250 to $1,000 a month.
My mom's
Wow.
double, more than double.
Yeah.
In the time since she sold.
Really, since they sold.
More than double.
Yeah. So these older buildings, you have to be worried about this. But he actually has to sell his house because he couldn't afford the condo fees anymore. Now, the good news is a year later, he moved in with his parents. He was a young married couple, and they moved in with their parents for like a year, saved their money, and then we helped them buy a house in the acreage where they're really happy out, and they've been over there for like 10 years now. Nice. And doing great. But yes, it can affect you so bad you can't afford it anymore and you move.
That's definitely one of the things people talk to me about. I say, I kind of like, are you looking at single family homes, HOA? And a lot of people say, I don't want an HOA. And one of their primary reasons for that is because they have very little control over the movement on that bill, right? That monthly obligation. And unless you get in there and get on the board and really have a mission to keep the HOA fees low, you just kind of ride and you're rolling with it. Yep. And you don't have any control over it. It's
true.
Other than your vote, as a member of the association.
That's it. And keeping it low, I understand the motivation. Nobody wants to spend more money than they have to, but all you're doing is just prolonging your pain, right? Because
there's always going to be a difference between the people. Like, just take the insurance question in general. Like, how do you feel about insurance? Like, I want the best coverage, or I want the lowest premium because I'm never going to make a claim,
right?
Type of mentality. And so you'll imagine that spread across a whole homeowner group.
Yeah, and
so true.
And me and Ross were talking off the air a couple of days ago about all these politicians yelling at each other about what to do, right? So just recently we had AAA and Farmers Insurance kind of like pull out or partially pull out of the area, and it's really getting
attention.
Yeah, and it's also getting a lot of people upset. And I think the insurance commissioner, he's just gone nuts, and now somehow he's complaining it has something to do with the woke stuff. My question is
probably a link there,
right? But my question is that it just shows how frustrated people are about this situation. Like, they want to blame somebody, but I don't even really think anybody knows who to blame other than Florida had these laws. I'm sorry.
Blame your neighbor that got the free roof.
Yeah, that's what I was going to say. Other than Florida allowing for so many years for these abuses to go on that we're not seeing in other parts of the country. So shame on us as a collective community and our legislators for not doing the right thing. And it
don't
isn't
look up,
just
Jim. Don't look up.
And it isn't. Yeah, exactly. And it isn't just like this one administration. This has been going on for a long time. I mean, everybody's been kicking the can down the road, and now we're in this really bad crisis, right? So when they changed everything, Ross, and this is what we were talking about, it was all to change the structure of how people can file claims so that there would be less abuse. Makes sense to me because of the crazy statistics. What did you say it was again? Not you, but what are the national statistics or the Florida statistics?
So Florida accounts for about 8% of all property damage claims filed in the United States.
But we're like 70 something.
80% of all property damage claims that result in a lawsuit.
So that's crazy town, right?
Yep.
So the thing is, what we were talking about, so now we have some politicians saying, oh, all you did is bail out the big companies, because what they did is they made it harder for the homeowners to sue the insurance agencies. Plus, they gave $3 billion as a surety fund almost, to make sure that the companies are propped up because they're worried that reinsurance won't back them. So the state of Florida committed $3 billion. So now they're saying that it will take time, but hopefully that will smooth things over. But now that we're still the prices are going up, insurance companies are still leaving. So now other people are complaining, oh, all you did was bail out Wall Street. You haven't done anything for Main Street. What about us? But then, Ross, me and you were talking about it. What could you do that would force or create incentives for the insurance companies to drop their insurance costs? I don't know what they can do other than change the structure of the way people can file claims.
Right. I mean,
I don't know what they can do. I'm not saying I'm happy about the situation, but I don't know what you could do.
Everybody's everybody's rates have been going up because the insurance companies are hemorrhaging cash by having to pay attorneys fees every time they're sued. Not every time, but a lot of the time.
Right.
Can I ask a question? We talked about reinsurance. Does reinsurance have any part of the litigation section of that?
No, when they're buying reinsurance, they're buying it for like hurricanes. That's what they're buying reinsurance
Big
on. Hurricanes,
single event type things. Okay.
Right, exactly. They do not buy reinsurance for being sued. So all of their cash has just been, the other statistic, it's whatever, it was 15 billion, I can't remember whatever the year was, but it was $15 billion that was paid out in claims that resulted in a lawsuit.
Right.
We determined that only 8% of that money went to pay the actual damages. 70% went to pay the plaintiff's attorneys.
Yep.
So everybody's rates that's going up, you're just giving that money to the insurance company to give to an attorney that sued them for the new roof.
It's just crazy. They got to figure out ways to fix this, but I'm not sure exactly what they could do other than what they're doing right.
I think they
what
did.
they've done.
I think they did. Take a little bit of time to settle in.
Yeah.
I guess we'll find out eventually. 877-927-6969. If you'd like to jump into the conversation, if you have questions, comments, concerns, dial it up. Jimothy will line you up. Who do we got on hold there, Jimothy?
We have Rick on hold. And speaking of homeowners insurance, apparently Ross helped Rick out. Rick, welcome to Florida Talk Real Estate.
What's up, Rick? How are you?
Yeah. Hey, thanks a lot. How you doing, Jim?
I'm doing good, Rick.
I've been a long time listener. So I think it's the first time I called in, but Ross and me had talked a couple of years back before I got stuff done on my house. I was worried about the 4-point inspection, but just recently did it on his advice and got my new insurance on July 1st with Brightway, and it saved me about $1,000 a year. And I got full insurance instead of forced on insurance.
Nice.
So I'm very happy. I'm very happy.
Now, Rick, this is a very good teachable moment for some people. So the reason why your policy went up is because the insurance company was asking you to do some repairs on your house. Is that true?
No. I tell you, it went long back when you first gave me some advice to renegotiate my mortgage. I was having a little difficulty in the construction back in 2008, I think it was, or 9. And you turned me on to people in Flagler and then the lawyers, and I had to renegotiate my mortgage. So they put forced insurance on me at that time. And I could have changed, but I would have had to got the 4-point with an old roof, and I just didn't think I thought I was going to be wasting my time, with the 20-year-old roof. So I didn't do it until I got a new metal roof, and the 4-point inspection went flying through, no problems. On a 25-year-old log cabin, and it's like wood frame, and it still went right on through. And got my insurance, so I'm real happy.
Yeah, that's
awesome.
That's a nice little story right there.
Yeah,
huh?
yeah. Thanks for calling, Rick.
Yeah, we haven't had a beautiful insurance story in a long time.
Yeah,
it's nice.
Yeah, it's weird
I
when
almost
somebody
don't
calls and
believe
says,
them.
"Man, I thank you so much.
Hey,
You're
Ross,
awesome."
you're the man.
Yeah.
Well, you should always get thank you so much. It's not your fault.
Nope.
You're just the messenger.
Yeah, I know, but
Middleman.
you get kicked in the.
No, I just had a feel good insurance quote come through. Yeah, here's the premier quote. So this is Ross's best quote, and the annual premium $1,658. Single family home, four bedroom.
Westlake. I'm gonna say Westlake.
4-bedroom, 2-car garage.
Sweet.
Yeah, $1,658 for a premium non-citizens policy.
I'll take it.
So what's your prediction? How do we get that, Ross?
It's $400 less than Citizens offered, which is pretty good. I think that is new construction in Westlake.
So he's right, half right. It's definitely new construction, but it's PSL.
All
Okay.
right.
All right.
Yeah.
All right. So
So there's another feel good. Ross loves writing an insurance quote where he actually has, look, there's like 7 options on it. He's like, whoa, when is that?
New construction in Port St. Louis.
And I love less than 2,000. That's awesome. Like, we get paid on premium, the more, if we write a higher premium, we make more money, but I'd rather write somebody a $1,600 policy than a $5,000 policy all day.
Yeah, that's
keep me in mind on that one.
Yes, sir.
Hey, Rick, since we got you on the phone, you have been a longtime listener to the show, and of course, you're a real radio head like all of us. But could you, over the years, you've had so many different things that you've called us on, all kinds of things. I don't want to go into all of it, but we call ourselves, this team that we've put together here is the one-stop real estate shop. Can you let other people know that are listening,
yes,
how we are a resource that way for people?
You saved my house, Jim, by the phone calls I made to you. I would have lost the house. I would not have been able to get through it. And what impressed me about you, Jim, though, one thing is when I first called, you set me on the track for the lawyers and all your team. And about 2 years later, I probably called you back, and you knew right away who I was. I hadn't had any conversation with you. You knew right away who I was and what my situation was. That impressed me about you. So, and I want everybody to know that you're there to help people. You really are, and you do.
Well, not just me. It's like the whole team, because I know we've got you to Mike, and we've got you to Ross. We've got you to the law office of Paulie Krasker over time, all of that.
And it's the caring that makes everybody remember, and it is remarkable. Be like, oh yeah, that was we did that for them. We did it's years later. Yeah, we got that policy, saved them all that money. That's the caring shining through every time.
Yeah. Well, I can tell you what else you're helping me with. I got on to that Florida Home Safe program that you suggested on the radio, and I took advantage of that. I filled out all the paperwork. I'm in the process of getting that, and I'm a door and window installer, but I'm going to have them. They're going to probably have to do my doors and windows. I want to get new doors and windows for my house, and they're going to put $10,000 in my back through the grant money. And I haven't heard too much advertising about that Florida Home Safe program, but it is out there, and I'm hoping I can benefit from it. I just haven't got 100% approved yet. But I'm also trying to be a contractor with them too, so I can do my own house. But I don't think they're going to let me do that. But I did fill out that paperwork too. So, but it is a good program for people out there to want to upgrade their house. It's not just doors and windows. I guess it's roofs and anything else. Right?
The hardening, right?
Yeah, that's exactly. I can't believe that you called, because this wasn't a stage call. He just called in, which is great. And Rick, this is exactly what we wanted to talk about next. Now, my computer just died, so we lost our YouTube, Facebook feed. And also all the notes I had for the MySafe home hardening program. And I don't know if I think it was called mysafeflorida.com is where you go to. I don't have it on my
mysafehome.com.
mysafehome.com.
But I don't think we lost those feeds, Jim, because doesn't Jimothy run the feed? I still show we're live.
I got it.
Okay, great. Well, my computer's dead, so I'm glad everybody on Facebook is still there, because they felt really bad. So Rick, would you mind staying on the phone just a little bit while we talk about this program with Ross for a little bit, and then just talk about your experience of actually applying for the program? Because I think it would be very helpful to people. Is that okay?
Yes, I will.
Okay, so Ross, they call it the home hardening program, and what they're offering, from what I understand, I'm doing this off the top of my head, is that they can offer a maximum up to $10,000 in rebates back to you. And for every $2 you put into hardening your home from storms, you get $1 back from the state, not more than $10,000. Now, some of the things that have to happen: you have to have an inspection from the state of Florida. You can't bring your own inspector out, one that's approved. They're going to come in, look at your whole house, and determine whatever deficiencies that you have that can make your house stronger. Could be a new roof. It could be the tie downs we talked about for the roof to wall connections. It could be windows, impact garage doors. What other kinds of things, Ross, that are for the
stuff on the wind mitt, right?
Yeah, just anything on the wind mitigation report, which is pretty much what you just said.
Okay, and then they give you advice of the things that you need to fix, and you don't have to fix it. It's just a report saying, here are the things that if you do this, you might be able to get a discount on your insurance and make your house more protected from the storms. Right now, when they came out, when you applied, how long did it take them to come out, Rick, compared to when you made the request? Was it weeks, days?
Oh no, it was quick, but it was just the wind mitigation, if I recall right, that was free through the Florida Home Safe. Am I correct in that? And then the other 3 points had to be through an individual that I hired. But they did a free wind mitigation is what it was. I'm pretty sure that was free. They came out within a week, and he checked over the whole house and almost pretty much found nothing wrong. He couldn't figure out how the log cabin was attached to the second floor, but it didn't matter. He was in the roof. He was everywhere and passed my wind mitigation. But it didn't take long.
And then, like, what kind of things did they say on your house that they would recommend that you upgrade?
Too harden.
Hard.
They did. I think that's another inspection. Because I haven't been fully qualified. All they did was give me the free wind mitigation. Because I had to upgrade my insurance. As far as the next inspection, I think I'm going to have to get approved for that. And I just finished filling out the second half of the paperwork just 2 days ago, and it's a lot of paperwork, very easy to go through, very quick. And one thing I learned, you can't, there's a phone number. Forget that. You'll never get them. I did an email, and they answered me within 24 hours.
So that's a good tip.
Phone,
Email's better than phone. Okay, because I'm a phone guy, so that would help me if I were trying to do this. So email better than phone. I pulled it up now. It's mysafeflhome.com, guys. mysafeflhome.com. That's where you got to go in order to start this process. So then from what I'm reading here, here's who is eligible for this. You must provide proof of a homestead exemption. So you need, this is for homesteaded properties. You must provide documentation that your home was insured for less than $700,000. Mike,
is it 7? At one point it was 5.
It says 7 now. This is as of July 1st.
Okay. I think when they first rolled it out, it was going to be 5.
So what does that mean? 700,000, like in real life? How do you know if your house is insured for less than 700,000 or not?
Look at your declarations page on your homeowner's insurance. It's that first coverage A.
Which I had to send that in too. They did ask for that.
Okay.
Yeah, because I had somebody who was applying and his dwelling coverage was like 510.
Mm-hmm.
And we could lower, it was still in the range where, that was a little bit above what the replacement cost was. So he was asking us to see if we could lower it to like 495.
Well, this is great. This started July 1st, the new number, and I'm actually on the mysafeflhome.com. So I know I'm looking at the right stuff here. Now, the other thing that happens is that after you get the work done, in order to get the money back from the state, what you have to do is you have to have an inspector come out and look that the work was done correctly and that you actually did the work that you're trying to get the money back from. Good. Yeah, I could say good.
Well, you have to use one of their people to do it. So, so it's,
which is what Rick is saying. He's trying to become one of those contractors because he does windows and doors. So he's trying to become a contractor for that. But you're probably not going to be, like Rick mentioned, you're probably not going to be able to do the work yourself. Oh, I'm going to go out and buy the windows and install them myself. Don't think that's happening.
No. What if you're a contractor though?
No, you have to be part of the state. You have to be approved for this program.
I'm saying, what if you get on their approved list? You can't do your own?
That's what Rick's trying to do right now. He's not sure.
I did it with Wide Green, the PACE program. I'm qualified for that, and I've done that a few times. But I've never tried to do my own house. I don't know if they would let me. And but with them, they haven't said no yet. I sent them another email. They haven't said no to I've sent in all my documentations of my license and stuff, and just waiting. It's just interesting. But there is 2 inspections, one from the building department and then one from them that have to come out after, and then you can get your grant money.
Another benefit through June 2024. If you buy anything like windows or doors for this home hardening program, you don't have to pay sales tax on the materials.
That's a nice discount.
Yeah. So that's 6% right there, or 7% or whatever it is right there. So that's another benefit. So mysafefloridahome.com, mysafefl.home. mysafeflhome.com. It only took me 3 times, guys.
.home.
Don't get me confused, Mike. I'll start screwing up even worse.
Just remember their slogan. It's something Timothy had it up is get readier. Get readier.
Get
for
readier.
hurricanes. So
Did
if you
they
type
really
in,
say that?
if you
Get
type in
readier
get
for
readier,
hurricanes.
Readier.
you'll find
My
it.
safe FL.
I got to get ready first.
Yeah, before you can get readier. So this might be a program to help you out to offset the costs in the long run. Plus, you get the peace of mind knowing that your house is better protected from any onslaught of storms that may or may not come.
And if you've been looking to put shutters on and you're like, man, that's just been expensive, this is the time to do it.
Mm-hmm.
Well, there's another benefit that came out of this for me. I may help other people. They actually set me up with this company called Unlock. They unlock the equity in my home and will give me up to would give me up to 80, 90,000 of my equity and not have to pay a penny of it until I sell the house at a percentage rate that they make from, that they'll make. But that's associated with this Floor Home Safe somehow, because I wouldn't have 50 grand I'd pull out and put in my windows, but they can unlock my equity. To unlock, and then they kind of work side by side, because they told me the same thing. You need the insurance documentation, and they know they're the ones that told me to call Unlock. So it's part of them somehow. I don't know what part, but somehow they are. But that's going to be a big benefit to me too. So I had not a penny out of my pocket and get this done, and then get 10,000 in my bank at the end.
That's great information, and Rick, I'm glad that you're getting great results, and thank you for calling. From time to time to ask for advice. We're always here for anybody that calls, especially you. And also thank you for that tip on the guy, Rem Dog. I'm going to give Rem Dog a call on Monday.
Oh yeah.
Okay.
I talked to him yesterday. Yeah.
Awesome,
Okay,
man. I appreciate it.
Thanks for everything, guys.
Okay, thanks.
Thank you very much.
Thank you.
Appreciate you always. 877-927-6969. It is toll free to be a part of the program. It's working very well today.
I want to be called Rem Dog. Isn't that a cool name? Kind of Rem Dog.
Is that like a sleep thing? Like
I don't know. It's a
rapid eye movement.
Yeah.
Dog.
Dog.
So anyway, another program that you can use that Rick mentioned was the Y Green or the PACE program. Now that program, Mike, I don't have the notes up in front of me, but that program is a similar kind of program, correct? Where you can do like solar energy, and I think you could do windows and stuff like that with it, correct?
Yeah, I mean, you could do what they would consider energy-related improvements. So things that help your energy footprint, I guess, which would include new roofs because of insulation type stuff, new windows, same thing, ACs. So there's a broad category of things, but kind of thinking like, is there some sort of energy benefit or savings by having something new and the latest?
And because of the roof and the windows, I'm including it in this process because that could help people
and those
reduce their insurance.
Those styles. So it's PACE liens is a property assessed clean energy, and that's a loan, but it's repaid through the property appraisers through your property tax billing process. So that one is a little bit different. It's not free money. It's not a grant of any kind, but it's just a loan that is paid back through the property tax bill.
And one of the things that people get surprised about, and I've had calls from time to time over the years that have used that program, and then they went to go sell their property and then found out that that money that hasn't been paid off yet in their property taxes has to be paid off at the closing. It can't be pushed on to the new buyer. Is that correct, Mike?
Yeah. So, I mean, the idea, I think the genesis of it was that it is something that's transferable. So you put on the new roof, you get a 20-year loan on it. If you sell the home in 10 years, because it's billed through the property appraiser's office, the payment could continue with the new owner. That was kind of the idea. And it was actually sold that way, or kind of pitched that way initially. But at some point, the lending agencies, so Fannie, Freddie, FHA, VA, basically all said, no. That's a lien we don't want to mess with. We don't want to be potentially in second position to that lien when the new buyer gets a loan on the home. So if you're buying that home with financing, that whatever the balance is on that PACE lien needs to be paid off as part of the transaction,
Right,
as part of the transfer of
somebody's
ownership.
got to pay that. Yeah.
Now, if you're buying it cash, potentially it's optional, right? Like the sellers would have to disclose it, that there's a lien that's going to remain attached to the property, and then the buyers could handle it however they want. But if you're doing traditional finance or any financing that I've heard of, they're not going to allow it.
So these are two cost-effective ways to do the repairs to your house that might help you save insurance and also protect you, what I call from the vagaries of the insurance industry of changing their mind. So you put the new roof on now, and if you can afford it, you're not going to have to worry about them changing from 3-year useful life to 5-year useful life. Just not an issue for you.
Is it
Don't
just
have to worry about it anymore.
Like any loan though? Is it all like debt to income, what you make, or is it all based on value of your home?
Everything.
Yeah, all of it.
Yeah. So there's going to be some sort of credit qualifying. So that could be credit scores, debt to income ratio. I'll call that under the category of credit qualifying, and then also up to a specific loan to value. And then the loan is probably a little bit higher interest rate than if you were to do like a 30-year fixed rate loan, right? So think of it kind of like a home equity loan or something along those lines.
Yeah, right.
Yeah.
And then
do they give you just a check, or do they pay as you go kind of situation? Do you know?
So I'm pretty sure the process is the contractor gets paid at some point, right? The full amount. And that's when you start accumulating interest on the loan. So there'll be some sort of close date where the check is cut.
Gotcha.
Yeah.
And if we don't mind, I'm going to bring up Jimothy here. Jimothy decided to buy new construction specifically because of being concerned about homeowners insurance over time.
Sure.
Buy the new home. He's doing something else right now, so he's in hearing us. But I'm sorry.
Yeah, he's lining a caller up.
Okay, sorry about that. But Jimothy, when he was looking to buy his new home, he's going to be selling his house and buying something different. He did look at resale briefly, but he right away focused in on single family, not in a gated community or anything, but just buying a lot and doing a single family home thing, because he didn't want to worry, at his stage in life about worrying about, I don't want the insurance company telling me, 3 years or 4 years from now, got to put on the new roof, or if they change the useful life and I have an older roof.
What is his stage in life exactly?
Huh? His stage in life?
Yeah. What did
He's
you mean
going
by
through
that?
a transition. He wants a different type of home. He wants a better location for his house, right?
Is it golden years?
We were
Is that
talking
what-
about why you were choosing new construction. Is a big reason was the insurance.
Oh, absolutely. 100%. It was one of the biggest, that and not having to worry about maintenance and things like that for,
Yeah.
a little bit, but pretty much homeowners insurance pushed me over the edge.
Yeah.
You want to take this phone
Yeah,
call?
let's go ahead and blow through. So
Are we going to be all right through the bottom of the hour to go
Yeah,
right
sure,
there?
absolutely. No problem at all. Yeah,
Sorry
matter of
about
fact, we're staying right on topic because Richard has a homeowner's insurance question as well.
Good.
Richard, welcome to
It's two Richards?
Yeah.
Well, last one was
Oh, there was Rick.
Rick. All right.
Yeah.
Hi, Richard. How are you this morning?
guys?
Good morning.
Hey, good morning. Thanks for calling.
I had an insurance, home insurance through Lloyd's of London, and it was being financed from an outfit called Tabco. I hope it's okay to say that on the air. And rumor was they were going to cancel everybody kind of along the eastern seaboard here. I'm sure you all heard the same thing.
Mm-hmm.
And because of this, I paid a huge payment, about $700 in December. Hearing that, I canceled it in January, and I can't get any of that money back. Is that how it normally goes?
So that's an excess and surplus policy, and excess and surplus policies have a 25% minimum earned premium, which means when you bind that policy and that policy goes into force, they're going to charge you for 3 months at a minimum, whether you cancel after the first day or at the end of the third month. They're going to charge you for those 3 months.
All right. I guess I didn't read the fine print.
Yep. Could I ask, was the I had one other customer use like a Lloyd's of London type of policy. Was it for an investment property, Richard?
No, sir, it wasn't. It's for my home.
Interesting.
So you-
Okay.
You end up with that policy when you can't, like Citizens won't even write a policy. So you end up with
you go to that excess and surplus.
So my question though is, if they're yanking, let's say that you got the policy today, and let's say next month they decide that they're pulling out of Florida and cancel your policy, do they still get to keep 3 months?
I don't. If they
If they cancel early?
it, no.
Oh, okay. I was going to say, you never know with this state,
Yeah.
right?
Yeah, right.
It goes both ways.
That's kind of why. That's kind of why I figured they were holding off on sending out the actual cancellation notices. So.
Mhm.
All right, they're just trying to find a way to hang on to it. I don't blame them. So am I.
Well, so why'd they cancel it?
They didn't. I did.
Oh, okay. Yeah, there you go.
They were. I just heard it was coming, and I figured if I canceled right away, maybe I could get my money back and put it in the bank or some kind of insure myself from now on.
What is going to be your option? Are you going to go without insurance now, or you maybe you don't have a loan, you don't need insurance, or what are you going to do?
Well, I'm paid off, so I don't have to have it from a legal standpoint, but I sure wish I did. I just think it's grossly unfair the way they're treating the people along the coastline here. It's criminal as far as I'm concerned.
Just out of curiosity, Richard, we're all just spitballing here, so you're just a regular guy like us. What do you think the state could do to, if anything, to help cure this process for the homeowner?
I don't know. I'm one of those people that I'm really in favor of less government, but sometimes state governments need to intercede, see if they can't get something for these homeowners. It's affordable. It's crazy, when some of your insurance stuff is almost matching the home payment. That's just out of line.
I totally understand. Well, thank you for calling, and I hope you continue to remain a listener. And any way we can help you, we're one phone call away.
That's it. FloridaTalkRealEstate.com or 888-973-7828. Great to hear from you on this Saturday, man. Thanks for being with us.
All right. Thank you.
All right, buddy. 877-927-6969. That's toll free to join the program like Richard just did. If you got questions, comments, concerns in the world of real estate, want to bring something up, if you're like, man, I really need an answer, you can dial that up. We still got about 20 plus minutes remaining for you on this Saturday. Florida Talk Real Estate is .com. Always remember, your one-stop real estate show.
I just wanted to wrap up with one thing. Ross and I read the same article where one of the local papers had all the insurance companies that are still in play besides Citizens in the state of Florida. And I think there was like 14 or something like that. Ross, when you started looking at those, what was the comments you said off air about that? Because I found that to be interesting.
Some of those carriers aren't writing new policies or have said, we're not going to write in Florida last year. And then there was one on there that I hadn't really heard of, and I went into it and it said you could get a quote. I probably entered 7 different addresses, and each time it was, sorry, not in your area, not in your area, not in your area. So I wouldn't if I was a consumer looking at that list, I would not.
Is that list probably more like 7, 8 in your opinion? Probably half.
I was not aware that Liberty Mutual was offering homeowners insurance. ASI is not currently offering. I'm not here. Universal, they left. Bankers, they left. Auto Club of Company of Florida, they just said that they're not writing new business. Universal started writing a little bit. So those ones that I mentioned there. Allstate, I'm pretty sure Allstate.
Yeah, and just so you know, this article was written on July 11th and was updated on July 20th. This article,
very fast moving environment,
which is a local TV station in Orlando. It wasn't a local newspaper. Sorry about that. But just to give you an idea, it's very hard to track this, and if you want the real information, you know where to go.
That's it,
right? It's just one call. You call up Ross from Brightway Insurance. The Juno Beach office, the only office.
Juno.
It's funny, like you say, like Ross. So in your daily activity, like how many policies you're writing that are not Citizens, like what percentage? And then you might think, well, that's Ross is maybe has limited option, but then you had the same question to your Allstate guy, right? Like how many policies you work for Allstate? How many policies are you writing that are not for homeowners that are not Citizens? It's going to be the exact same answer.
It's going to be less.
Yeah,
less
because they have less options.
They've got Allstate, and they've got a handful of carriers with relationships with other carriers, but most of those have gone out of business. And the other ones, just aren't really offering, same carriers that we have access to, and they're just not offering new coverage right now. We do have a little bit more carriers than some other people because, we'll present other options, and people will be, my agent just told me Citizens was my only option.
Yeah.
No, you've got this too.
So you're always looking for it, looking for what's,
I mean,
appropriate and affordable.
Well, Citizens is always looking for it for you, aren't they too? Aren't they always like, hey,
well,
there's one that might be able to slide you in?
Yeah, I mean, Citizens is kind of looking. They don't want you.
offload.
Yeah, they're trying to get you off their books too. So
if you have Citizens, you probably get mail from time to time says,
pay attention to it too.
Yeah, because some will say if you don't respond, we'll do it for you.
That's what happens.
Yeah,
That's their depopulation program.
Open your mail. Yeah.
Mm-hmm.
You got to open up. Thank you for reminding us about that. You got to open up your mail. Remember when we were doing, when everybody was in foreclosure and bankruptcy and hasn't been making their payments, and they would stick their head in the hole because they just didn't want to deal with it. This stuff is like goes through. It's like your junk mail, and it'd be very easy just to just throw it away with your junk mail. If you see anything with the Department of Insurance or your insurance company, open it up.
Some might you have options and you choose, and some there might just be one option and it'll just do it for you if you do nothing.
Yeah.
And some says nothing's going to happen if you don't do anything. I know that I think all those are accurate scenarios.
So there's the depopulation and then there's the other one where they're automatically moving you because they did find a carrier that was within 20% of the renewal.
Right.
So you're automatically being moved.
And at some level, you agreed to allow them to do that.
That's in your.
That's what you signed.
Yeah, and that's what you signed.
But and nothing changes on your end. It's just whoever's going to handle any claims is going to change until your renewal.
Correct.
Basically.
And right. So your premium, even if the
Nothing
premium was higher with the new company, nothing's going to happen until the renewal premium. Until the renewal. The other option is their depopulation program, where they're saying, hey Johnny, this company has offered you a premium, or they're offering you coverage at the renewal. Here's what the premium is. Would you like to move over, or would you like to stay with Citizens? Tell us what you want to do, but if you don't tell us, then we're automatically going to move you.
Right.
Yeah.
And
So
it's
open the
usually going
mail.
to be in your benefit. Usually.
I mean, sometimes I've seen it where it's more expensive.
Have you?
Or sometimes I've seen it where it's in a couple $100 and it makes sense.
Yeah.
And sometimes I've seen it cheaper. So pay attention.
Because I've opened it several times, my mail, and they give you hey, this is what their renewal is going to be, and this is what ours is going to be. And for anybody that's looking to save money, you're like, okay, well, let's go with that one because that one's lower. That one's the one.
Yeah, and
that's the easy choice.
It's an easy choice, right? Yeah.
I mean, even I would be worried, if you get switched off of Citizens, is that other carrier going to be around? They could bail out of Florida in 6 months, and then all of a sudden you're back in this search, right?
Citizens is getting so full now, though. Right now, I'm really getting worried about it. We were well under 1 million policies written with Citizens, and they're projecting we're going to be and they were trying to do that, and it took them years because we were at over 1 million at one point, and then slowly over time we got down to 600,000 or the high fives, 580,000. And now they're predicting that we're going to be at 1.7 million policies in the state of Florida.
And I know Citizens is doing a lot of sending their inspectors out too, right? In a lot of these scenarios, Ross, where they just need to make sure that everything's as is, and then they do the switch in the policies. But if you don't respond to these guys and they try several times to get in touch with you, they'll just drop you, from what I understand. Be like, well, our inspectors can't get in touch with you. You're now dropped. And then you're just flailing out there because you're not answering your phone or returning any phone calls.
And what Ross says, if you get dropped, that's a big deal. Getting dropped, right? If you have a lapse in insurance, that could be a big deal, right?
Getting
new insurance.
Really depending on, again, it's going to come down to age of roof. What your options are at that point, because you may have a carrier. Right? Citizens is doing an inspection. It's not unique to Citizens. All the companies are sending an inspector out at most of the time at renewal and all the time at new business.
Yeah,
all the time.
It's very interesting. The new multi-million-dollar commercial properties that are residential properties are popping up like Tic Tacs all over the area, like the Soso neighborhood in West Palm Beach Gardens. On the Intercoastal Fingers, on just north of Meisner Park. There's all these neighborhoods where they're tearing down homes and building these big mega mansions, McMansions in the old lots. their roof structures are completely different than what you would expect for residential property. They're almost like commercial roofs, where they have completely flat roofs. And I was talking to Derek from Ross Brothers Contractors, because he was building houses like that with those types of roofs. I'm like, what's going on with that roof structure? I've never really seen that for residential. He goes, Jimmy, these are commercial roofs and they last a really long time. And he goes, so these people don't want to worry about anything. They're living near the water.
Yeah.
And they just want to
So
do
they're
it
doing
that
like
way.
a flat reinforced concrete roof?
I think so. And then
Okay.
they have the parapet. So like you can't see the roof really because, let's say,
Just down a little bit.
Yeah,
like
the
a
roof
wall.
is, yeah.
Are they building like access up there? If I had that, I would
I
want
don't,
access.
I don't
up
know.
there.
I didn't.
Well, because that, I
Sunbathing.
mean,
What's that?
Sunbathing.
Yeah.
if it's a
exactly.
flat roof that is not reinforced concrete, that's the insurance company don't
No,
like
this
those.
is reinforced
Okay,
concrete
all
for
right.
sure.
Okay.
I'm
And
sure it's hurricane hardened and also
I think he said they go up to
lasts forever.
210 miles an hour or something. And he was talking about all the reasons why people are doing it. And they're just like, I don't want to mess around with this. I'm just going to build the toughest one.
bunker.
If I were to build, if I really were to go to crazy and I wanted to buy really new construction, I really want to do it my way, I would just do the solid poured, the cells where you put the foam cells up and do the solid poured concrete.
I would do a dome structure.
You would do the dome?
Like a ball or like a
Biodome.
like a 20-sided
There's
die
some in
type
your
of thing.
neighborhood. There's
Yeah.
stuff like that in your neighborhood.
Yeah.
But
That's why he
the
wants it. He
solid
sees it
poured
all the time.
concrete walls, they just make so much sense to me. And then you could put as much rebar in there as you want. You could put in extra rebar. It's so cheap compared. Well, it used to be cheap compared to like while you're there, just throw in extra rebar. Talk to your engineer. But
Yeah, that's what
just throw
Devasta
it in
did.
there.
Yeah.
Devasta just poured concrete and just kept on boom, 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 boom,
Yeah.
boom. Made all those Devasta homes are bunkers.
I feel like that's the way to go in South Florida if you could afford it. I heard that it's like 25 to 30% more to do it that way.
I had a question. We talked about like if you get dropped and if that's what are the implications of getting dropped. I talked to a client. She said for whatever reason she had a lapse of coverage, and then so one insurance carrier dropped her. She had a month, and then she got the new policy. And in the meantime, the lender had put her on forced place, and that premium was an annual premium of X. And she said, well, look, I got new insurance now. And they said, well, we can't refund you because the forced place insurance we pay up front for the year. And there's no refund.
There's no way. Because what happened, that's
not possible.
Not possible because you, in your agreement, it says provide us with homeowners or we'll get it for you. Those policies are refundable.
Okay.
Through the
Hey,
if I were her, I would
save her some money, Mike.
Yeah.
So
because
I'm
what
call her back
happens
and
is
say, hey, listen, the forced place premium is refundable. They owe you some money, or you owe less than they want to collect from you.
Yeah. So what happens is the insurance. So you say she went that month. Even if the mortgage company didn't actually buy her a forced place policy yet, it would have been retroactive to the date that her policy expired. And so 30 days went by, then she got a new policy. The mortgage company is going to charge her whatever that annual rate was, but for that month, for those X amount of days that she did have that gap.
Okay.
That's all that they should be charging her for.
Okay. I'll let her know.
That's really good stuff. I wanna get into Johnny's story because it's an insurance issue. But before we do that, I just want to, because I promised I would talk about this, and we're going to talk about it for like 2 minutes, and then we're going to get into the story.
Well, we don't have to talk about mine at all. It's not. It's
No, but we
entirely-
teased it.
No, we have to,
all
and
right.
I think it's a great
Yeah,
story. It's a
not-
good story if you don't
fine.
mind, as long as you're okay.
It's fine.
Okay. We're going to celebrate your misery, John.
Nice.
Here's the thing. A year ago in June, we hit the highest point ever for a single family home median sales price in Palm Beach County, which was $620,000. Then interest rates also right around that time got up to 7.08%. And then we saw prices kind of dropping, and it got as low as at one point, I think 1 month was like 560 something, right? 560, right?
So
We
you're
had
saying June
10%.
of 2022?
June of 2022. So
Rates were, this is on Freddie's report, rates were 5.83.
yeah, but by
5.7.
July something, it was 7.08.
November.
No, there was twice last year. It was in 7.08. It was in the summer, and then again in November. It happened twice. I'm positive.
You want to bet?
Yeah, I'll bet on. I'll bet on
I mean, I'm
that.
looking at
I'll
the chart.
bet on that.
I'm looking at the chart right here. What are we betting?
What do you want to bet, Mike?
$100.
You want to go to World of Beers?
Ooh.
At the food over there.
So
is
what are
good.
you saying? The high was when?
Hold on. You're getting me off track of what I was trying to talk about, but hold on. Okay,
That's
so
the
Mike,
plan.
now that
Yeah.
you got me, I got
We're
the
on this
Freddie Mac
bet.
report up now. Let me get the Freddie Mac report.
You counting your doll
'Cause
hairs over there?
now you got
You're going to
me,
be so embarrassed in
No,
just
I'm
2
not.
seconds.
No, I'm not. I'm positive.
Of what?
Okay, so I'm looking right here, 708.
Mm-hmm.
That was October 27th is 708. And then if you go back, hold on. This is
Uh-oh.
the chart. Hold on. Let me
Florida
get to
Talk
the
Real Estate is a .com.
Hold on.
We're doing this on the
Real estate.
computers
Yeah,
for all
this
the
is
listening
happening.
audience.
Yeah, we got dueling laptops.
Jim's about to bring up the exact chart I'm looking at.
I think so.
5.7. And then we got to 6-7 in September.
Yeah.
Maybe not, but I thought we hit it twice. I know we hit 708 twice. So we hit it in November 10th. Maybe we hit it in October. 708.
Mm-hmm.
Oh, October and November we hit twice 708. Sorry about that, Mike.
So I win?
Yep.
Yeah, you win.
Boom.
So, but the point, the
anticlimactic.
point I'm trying to make is
We didn't
as
have the
the
payoff, I
interest
was
rate, okay, as the interest rates went up, okay,
We still hit
from
records.
this summer,
Yeah.
right? We were as the interest rates were going up, the prices were going down, right? We lost about 10%, 12% off of that 620 from the low, okay? But last month, which was the last reported month, which was May, we hit 622.5. That's $2,500 more than the 620 a year ago. And then June of this year, we just hit 625.
Oh,
right? This is with these higher interest rates. We've been at between 6.48 at the beginning of the year, all the way. Mike, check this.
Yeah.
6.48 at the beginning of the year, all the way up to as high as 6.96 this year, or 6.97. And despite that super high interest rate compared to historic norms over the last 5 years, prices are still going up. So the people that are predicting or have been predicting and continue to predict that we keep going to have this crash, keep having this crash, it's not really looking that way. The other thing that happened with the interest rates is we had a slight dip this week. We went basically back to 2 weeks ago because we got up to 696 last week, and now we're at, what are we at now, Mike? Because when I look,
678.
678.
So basically where we were like 2 weeks
ago.
back. Yeah.
Yep. So at least we're not going up. I thought maybe when I opened it up on Thursday, we would see a 7 there. I wasn't looking forward to that.
Yeah, we had that weird blip on the July 4th week, and then I think some inflation numbers came out that calmed the waters.
They really calmed the waters.
But like some people are saying, like these rates just have to come down. It's just too much pressure on the system. The rates have to come down, and what you're talking about is, showing that no, they don't. Kind of like housing prices are holding because inventory is so tight. They don't have to come down, guys.
It's the inventory is the thing. So if your house is priced right and it's in decent condition for the price in your neighborhood, it's selling like Chick Tacs, like the guy Richard selling in 7 days in my neighborhood, right? I'm experiencing that in his neighborhood. Yes, absolutely. But in that same neighborhood, there's houses on the market 180, 200, 300 days for real.
Yep.
I'm not joking. I just saw a house a couple days ago, 448 days on market, right? So, I mean, so
we got
if
a
you
call
don't,
earlier today, JR, who's going to be selling his home, moving to Ireland. He
Mhm.
said his neighborhood, they're like,
that,
within-
I thought it was
That's who it was,
Richard. It
yeah.
was JR. I
Yeah.
apologize. So, it's really, it's really a good market to sell right now if you do it right, right? It is actually a good market. It's not a horrible market to sell. Being a buyer, if you're well qualified, there's deals out there for you, especially if you're looking for a fixer-upper. You can get some decent deals out there if you have the right agent. If you're just looking for a fixed-up turnkey house that's ready to go right now, if you like it, there's going to be 5 to 10 other people going to like it. You're going to have a bidding war. So pick your reality. This is such a split.
But be prepared
thing.
to pounce. Like when it pops up, you got to be prepared to pounce on it.
Yeah, or you're gonna totally miss out. So I just wanted to get into that really quick because I really wanted to get into Johnny's thing, which is an insurance kind of thing.
yeah, it might be.
So
Yeah.
I understand that you kind of had a let me see. I could do 2 jokes. I was going to say I think you had a unexpected visitor.
Yeah.
but I also think that you could say is that, Johnny, when did you turn your house into a drive-through?
Right. What the?
When are you going to be
Knock
selling
first.
burgers or tacos?
I'm about to go home on Monday evening. I'm about to clock out and call it a day. And as I'm grabbing my phone to get my little code to clock out, my wife's calling. It just doesn't happen, right? Hey, babe, did you get the pictures? What pictures? Oh, you didn't get the pictures. Oh, I'm about to clock out. She's like, yeah, we got hit by a car. I'm like, what?
We got
What do you
hit
mean
by
we
a car.
got hit? She's like, the house got hit by a car. It's like the house. Yeah.
There it is.
Yes, we did. And then I will call you right back. Right? So then I'm the call right after 911. So this is fresh. We just got hit by a car.
Was she super calm or was she freaking out?
Remarkably calm, knowing my wife. Yes. Remarkably calm, because in the moment she went from this was intentional, because she's looking out my sliding glass door across my pool and sees this white blur shoot through our backyard, almost go into the pool, and like double back around. She sees this Range Rover shoot through, take out our fence, almost go in the pool, and then it turns and comes back towards the house. So instantly she's like, somebody is trying to slam into my house.
It's one of Johnny's haters.
Yeah, exactly right. What did he say on Florida Talk Real Estate?
Oh my God.
It was a really bad event. It kind of it spilled out of my neighborhood. So we laugh for almost 10 years there. I live at the corner entry point of my neighborhood. I always imagined, and I know it's hard to think this way, but I always imagined someone was going to take out my fence. But I imagined it be hauling butt into my neighborhood, dark 30, standing water, hydroplane, there goes my fence. It's the way it always played out in my head. This one actually came out of the neighborhood, down the street into me, with the exact opposite of how I thought it would play out. And fortunately, nobody that I know of was hurt, but this guy had some kind of event where he hit several parked cars in the driveways, making his way to my house.
Wow.
And then was just on the gas through this, I'm assuming, medical event. Yeah.
Wow. Just reminds me of that Wolf of Wall Street scene.
Yes, wow. I was just thinking that.
Yeah, I was kind of thinking that too. So let me ask
Wait a second, Johnny. Some people, I'm sorry, Jim.
No.
Some people might say because of you've thought about it that you actually manifested.
I manifested it.
Yeah.
You don't believe
read
that
the
stuff,
secret,
Mike.
haven't you?
I said some people would
I
say.
know.
I wouldn't say it. I wouldn't say it.
Nobody here.
No.
So let me ask you this. So the fence was damaged.
Yes.
Was the pool damaged at all?
So I think the decking had a little bit of issue. I do. We got some serious inspections coming at us. Yeah, there's a couple of hits on both sides of the home. So one corner of the home going through the fence line, and then the other where he ended up.
So the corner, was that the garage corner?
You're in the backyard pool side first, and then back through to the
other side.
So you're not on the garage side.
Okay,
you're on
the other side.
Yeah, the main street
where the
side.
main street is coming.
So
in.
he kind of hit the two corners of the street facing wall.
Wow.
Not only did your house get hit, it got hit twice. How crazy is that?
By the same
it's crazy.
I had a client whose house got hit twice separately within like 2 years. Then she got dropped.
So she got dropped. It's her fault.
So my first call, I called my wife back, and then I'm like, I gotta call Ross, right? Just because I have. What am I doing right now?
Right.
Like,
what should I do?
Right. What do I do?
Right.
And we're not 100% sure exactly how this plays out.
Yeah.
But,
Like, is it auto? Is it homeowners?
well, clearly through his auto.
Right.
Yeah.
Should be.
But if I get my homeowners involved, even if I don't make a claim, just even kind of getting them involved could be.
I mean, I think you ought to get him involved because, that guy should have property damage liability, but the only amount that you need to carry in Florida to get your car registered is $10,000
minimum.
That's it. So, if that's just because it's a nice car doesn't mean he's got good coverage. So, yeah, you may want to, give them a call and It'll be a subrogation issue anyway.
Well, if you don't mind, Johnny, we're going to follow this saga through and find out what happens, like as you're dealing with the insurance companies and the contractors later and all that. I know you have good contractors, but
I was the very first call to his insurance.
Yeah.
And she's like, well, okay, so what was this one again? Because it all wanted to be automated. And they're like, what was your car? I was like, I don't have a car. There's no car. Like, so yeah, when I finally got a voice, and
my house was parked.
Yeah, I was like, I'm going to need your help. And
Did
she's
your
like,
airbag go off?
Plus, you said they hit other cars, so there's other claims.
Yeah,
that
that's
go
other
into this.
property damage.
Claims ahead of my claims.
Right.
You ought to.
that's crazy town.
So fun.
Oh my gosh.
That's what I wanted to deal with Monday when I got home.
Yeah.
Yeah.
You're going to get new stuff.
We'll see.
Hopefully.
We'll see.
Yeah.
Yeah, I'll keep you all updated. I promise.
Thank you.
No, thank you very much for everything that you do. Thanks for being with us on a Saturday. Florida Talk Real Estate is always there for you. And I'm talking about the entire team. Pros. They're experts in their field. And you get them all at floridatalkrealestate.com. Your one-stop real estate shop. Aptly named. It's really perfect because, well, you got pros. They're all in one place. floridatalkrealestate.com. Know it, use it, love it, and share it. Jimmy D, have a great weekend.
All right. Constance said, holy smokes, Johnny.
Holy. Ross, have a great weekend as well.
Thank you. You too.
And Mike, I hope you do the same.
You too, brother. Good luck with all that.
Jimothy's going to stick around. We got the locker room coming up next. I know I got Greek and hopefully Joe. Oh, I see Joe. Good. Locker room's next. Jimothy, have a great weekend, my friend.
You guys as well. Have a great weekend. Good to see you.
We'll be back next Saturday, 2 hours of infotainment every Saturday. Florida Talk Real Estate. It's right here on Real Radio.